Welcome to episode 3 of our complete value investing course. I'm Manish Goel from multibaggershares.com. Albert Einstein reportedly called compound interest the eighth wonder of the world. He said, "Those who understand it, earn it. Those who don't, pay it." Today, we'll understand why compounding is the most powerful force in investing, and how just 1 lakh rupees can grow to 50 lakh rupees or even more. The Indian stock market has gone up 500 times over the last 40 years. That's the power of compounding. Let's unlock this magic together. Compounding means earning returns on your previous returns. Think of it like a snowball rolling downhill. It starts small, but as it rolls, it picks up more snow and gets bigger and bigger. In investing, your initial returns become part of your invested capital, which then generates even more returns. Let me show you with numbers. If you invest 1 lakh rupees at 20% annual growth, in 10 years it becomes 6,19,000. In 20 years, it becomes 38,34,000. And in 25 years, it becomes 95,40,000. Notice how the growth accelerates in later years. That's the magic of compounding. The longer you stay invested, the more powerful it becomes. Let me give you real examples from the Indian market. Bajaj Finance went from 6 rupees to over 1000 rupees on a split adjusted basis. A 166 times return. If you had invested just 1 lakh rupees in Waaree Renewable Technologies 10 years ago, it would have grown to 4,94 lakh rupees. That's a 494-fold return. And our own case study, Titan Biotech, has grown from around 8 rupees to over 1000 rupees, delivering more than 125 times returns. The Indian stock market as a whole has gone up 500 times over 40 years, representing a compound annual growth rate of about 15 to 16%. Quality companies combined with time create extraordinary wealth. Let's look at the Titan Biotech compounding story in detail. This company started trading at around 8 rupees per share. What made it special? Consistently high return on capital employed above 25%, very low debt, strong promoter holding, and revenues growing year after year. These are the hallmarks of a quality compounder. The stock has now grown to over 1000 rupees. A remarkable journey of wealth creation. This is exactly what compounding does with quality businesses. When a company reinvests its profits at a high rate of return, the value compounds exponentially over time. Patient investors who identified these qualities early and held on have created life-changing wealth. If compounding is so powerful, why do most people miss it? 4 reasons. First, impatience. People sell after a 20 or 30% gain, missing the 100x journey. Second, F&O gambling. SEBI's data shows 90% of futures and options traders lose money. They destroy capital instead of compounding it. Third, chasing tips instead of researching quality companies. Tips make you trade. Research makes you invest. Fourth, panic selling during market crashes. Did you know that the average multibagger stock suffers a 56% drawdown during its journey? More than half its value drops at some point. Those who panic sell lose out on the compounding miracle. Stay invested in quality. Here's a simple trick every investor should know. The rule of 72. Divide 72 by your annual growth rate, and you get the number of years it takes for your money to double. At 15% growth, your money doubles in 4.8 years. At 20%, it doubles in just 3.6 years. At 25%, which is the kind of ROAS that quality companies like Titan Biotech deliver. Your money doubles in just 2.9 years. Now imagine this doubling happening again and again over 15 or 20 years. That's how 1 lakh becomes 50 lakh. And 50 lakh becomes 5 crore. The two keys are, start investing early, and stay invested for the long term. Here's your compounding action plan. First, invest in quality companies with high ROAS, low debt, and honest management. Second, reinvest your dividends to maximize the compounding effect. Third, avoid wealth destroyers like F&O trading, intraday trading, and penny stock speculation. Fourth, hold your quality investments for 10 years or more and let compounding do the heavy lifting. Remember, compounding is like planting a mango tree. You won't get fruit tomorrow, but in a few years, you'll have more mangoes than you can eat. In our next episode, we'll study Benjamin Graham, the father of value investing, and his incredible legacy in India. Subscribe, visit multibaggershares.com, and keep compounding your wealth. I'm Manish Goel. Invest in quality. Invest for the long term.